So this is the real numbers behind how the peg policy works. So this is the peg policy framework for TTSLA. So let's say that you've got the current price of TTSLA is $4.33 to $4.44, which would mean that the price of TSLA is about $433 to $444. So again, TTSLA trades for 1/100th Tesla. So there's an oracle that's watching the TSLA price, and it's telling TTSLA's rate policy what that price is. So if it's trading within 2.5% of the TSLA price, then there's no action from the rate policy. So what does that mean? It means that the baseline APR is 3% yield for TTSLA. That never changes. So whatever TTSLA you hold, you get 3% yield. That's the bare minimum. You're always going to get either that or more. If the price starts to deviate, so if TTSLA drops, and again, we're going to use the numbers in this framework, which are actually, ironically, pretty much what the market is right now. So if the price of TTSLA drops and the price of Tesla remains where it's at, that means that it's deviating to the downside. So tokenized Tesla is essentially losing its peg strength relative to TSLA. If it deviates between 2.5% to 5% below the current Tesla price, then the APR gets increased by 200 basis points, which means that it goes from 3% to 5%. If it deviates from 5 to 7.5% below the TSLA price, the rate actually increases even more. It goes up by 300 basis points from the base APR, or another 100 basis points from the previous tier. So it goes to 6% APR. So that means that if tokenized Tesla suddenly drops from $4.33 and Tesla's still trading over $433, the interest rate increases to 6%. If it continues to deviate and it goes from that 5% range to 7.5% to 10%, they're calling it, the policy signal is clear peg defense, where it goes from 6% interest or APR to 10% APR. So that means that if you're holding tokenized Tesla, you're now getting a 10% yield, and this is paid out daily, and this peg policy is adjusted every single week. So every Monday at 0 o'clock UTC, the new peg policy for the week is set. So this is all predictable. You will know leading into the Monday what the next week's yield is going to be, and it's all based on the oracle price of Tesla for the prior week. So if you go into the next week and tokenized Tesla is trading 10% cheaper than Tesla is, for example, if Tesla's at $440 and tokenized Tesla's at $4, you know that it's trading 10% cheaper. You know that the interest rate is now going to be 10% for holding tokenized Tesla. So that is designed to increase demand, to say, well, I know that the peg is going to get, and this encourages front running. You basically can sit there and you can say, I know that the peg is going to be regained at some point, and the lower that it goes, the higher the interest rate gets. So it becomes more and more desirable to buy up tokenized Tesla, because not only are you planning to profit from retaking the peg, you're also profiting along the way from the higher interest rate. So if it continues to depeg from there, so let's say that it goes below 10% deviation, well, now you have peg defense mode and the staking lock incentives activate. So what does this mean? It means that the interest rate goes from 10% to 15%. So again, another big spike in yield, and the 3 different tiers of locking come into play. The locking thing is very interesting. So in the bottom right here, I actually think I'm kind of covering it up. I'm covering it up, but you can go to the docs if you want to see it, and I'll just walk you through it verbally. There's a lock reward for 3 different tiers. So if you lock TTSL, and by the way, this only opens up when it deviates more than 10% off its peg. Then you can lock your TTSLA for 30 days, 60 days, or 90 days, and you can get a bonus yield for doing so. So what does this do? It allows people to buy TTSLA off the market and stake it in order to lock supply off the market. So what does that do? It reduces the circulating TTSLA that's out there, and then it locks it for some specific term, and then the user gets higher yield, and the marketplace has less TTSLA that it needs to buy up in order to regain the peg. So this is a way of adding even more demand and making demand more effective. So it has those 2 net benefits in order to allow TTSLA to regain its peg. So the lock rewards only activate if it deviates more than 10% to the downside for an extended period of time. So if it continues to deviate, let's say it goes between 12.5% to 15% below the peg, So again, we're still assuming Tesla's at like $440. If TTSLA is trading at, say, $3.78, the rate hike from the base APR is 1,200 basis points, which means that the total yield is now 17.5%. And if it continues to deviate, the yield just goes up. So it goes from 17.5 to 20% if tokenized Tesla is trading at in the $3.67 range to the $3.78 range. This is considered maximum intervention territory, where essentially the rates are hiked to their maximum. And then you've also got the max lock rewards that are activated. So essentially, it's telling the market, hey, the interest rate is now 20% if you buy tokenized Tesla. And if you then stake it for, say, 90 days to get the max yield boost, you'll get 25% yield if you buy tokenized Tesla and stake it for 90 days. So what that means is, let's just say that this happens. I actually don't think I don't know. I mean, it's something that you have to see in the market. I personally don't see it getting to that point because the interest rate, going up every single week and then paying out daily, I think is going to be enough of an incentive to drive it right back to the peg more quickly than would be needed to reach these figures. But if it does reach these lower figures, what's going to happen is people will be out there, people like me, for example, and I'll say, okay, I can buy 100 tokenized Tesla for, say, $3.50. The peg is saying that tokenized Tesla should be $4.50, let's say. I can buy it at $3.50. I can then stake it for 90 days, and now I'm going to earn 25% yield on that tokenized Tesla I bought at $3.50. I logically know that eventually enough people are going to do the same trade so that tokenized Tesla drives itself back up to $4.50. And maybe along the way, I say at $4.30, I'm like, look, I made an 80-cent profit and I got paid a 25% yield for the past, let's say it takes weeks for that to happen. I'm good to exit the trade, take a profit, and then maybe wait for another trade on the peg.